Okay, so this week is a little different. We are revisiting the statement of cash flows that we learned back in financial accounting. So you will see that you have chapter 12 in your book, and it's the same chapter 12 that you would have had in Accounting 2140. So you should brush up on the statement of cash flows. But our focus this week is going to be a little bit different. It's going to be on analyzing cash flows. So I've actually provided you with the lecture notes. If you go to your chapter review notes, okay, you'll see there's the standard review notes if you need to brush up. Okay, so review notes chapter 12, but then there's also a cash flow analysis. So if you download these, I have provided you with some lecture notes on the finance concept of analyzing cash flows. Okay. Because you'll see you don't have a smart book assignment this week, you just have a homework assignment. And so the homework assignment, though, is going to require a bit of thought. And the first several problems, I think the first 5, you're going to watch a video about the finance view on cash flows and then answer a question. So this kind of gives you a nice introduction into some finance concepts. For those of you that will be going on and taking finance classes. So I think it's the first 5, yeah. The first 5 will require you to listen to the video and answer questions, okay? Let me give you a little bit of a summary of what you'll see on my review notes, okay? So the finance breakdown on cash flows is a little bit different. They consider the cash flow from your assets, and that equals your operating cash flow minus your net capital spending minus your changes in net working capital. So we're kind of rearranging what we did on our statement of cash flows that we do for financial reporting purposes, right? Because we had our cash flows from operating activities, our cash flows from investing activities, our cash flows from financing activities is what we added together to get our overall increase or decrease from cash. Okay, so now we're breaking it down a little bit differently. So operating cash flow, net capital spending, that's a lot of our investing activities. Changes in net working capital, if you recall from when we did the cash flows from operating activities, right? We had a look at the changes in current assets and current liabilities. Well, just a reminder, that's what working capital is, the current assets minus the current liabilities. So our operating cash flow, we take our earnings before interest and taxes. Okay. We add back our depreciation because depreciation is not a cash flow, right? It's a non-cash expense. And then we subtract our taxes. Our net capital spending. So what did we spend? The difference between what we spent to buy new fixed assets and what we received from selling net fixed assets. So we take our ending net fixed assets, so that's the book value. Subtract our beginning net fixed assets or our beginning book value, so that change. But then we got to add back depreciation, right? Because that would have made your ending net fixed assets lower. We add that back. And that'll tell us our net capital spending. And then the change in net working capital. Our ending net working capital minus our beginning net working capital. So we look at the beginning of the period and we subtract current assets and current liabilities. That's our beginning net working capital. And then we look at our balance sheet for the end of the period and we subtract current assets and current liabilities, subtract those two numbers, and that gives us our change in net working capital. So then we can just plug this into our formula here. Our operating cash flow minus our net capital spending minus our changes in net working capital gives us the cash flow that we received from assets. Another way we can look at it is our cash flow from assets equal our cash flow to creditors plus cash flow to stockholders. So our cash flow to creditors is any interest we paid to our creditors minus any new borrowing. If we borrowed new money, then that was a cash flow that we got back from our creditors. And then cash flow to stockholders, dividends we paid, that would be a cash flow that we gave to our stockholders minus net new equity. So if we issued new shares of stock, then we would have gotten cash back. Okay. So this is how your cash flows are analyzed for finance purposes. And that's what you're going to learn about by watching those videos and answering those questions for your first 5 questions in the assignment. Okay, then problem 6, you're going to be working on some financial analysis. So you're going to go and you're going to click on Appendix A, and you're going to look at the Apple statement of cash flows. And you're going to be asked some questions. So the direct method or indirect method. Okay, so that would have been something we learned about in financial accounting. And hint, we did the indirect method. And then they want you to just pull some numbers. So look at the statement of cash flows and identify numbers. Cash provided by operating activities, cash dividend paid. They ask you, did they have sufficient cash flow to pay dividends? So compare your cash flow from operations to dividends. And then compare whether they had more or less cash to repurchase common stock. Or did they spend more or less to repurchase common stock, right? So that's buying that treasury stock that we see under the financing activities. So you're going to click on Appendix A, and that will bring you to Apple's financial statements. You're going to want to scroll down, right, past the balance sheet, past the income statement, past the shareholders' equity, and then here we're going to have our statement of cash flow. So here we can see, and we can see it's prepared under the indirect method. We can see our cash flow generated by operating activities, right, and then some of the other questions we had, right, repurchases of common stock, dividends. So you're going to pull those numbers off of the financial statement. And that's the statement of cash flows. So the next problem is asking you to compute the cash flow on total assets ratios. Okay, so if we go back into chapter 12, we can see that shows up. Let's see, what page number is this? On page 473. Okay. And so we can see the formula here. Cash flow on total assets equal cash flow from operations divided by average total assets. And so this is going to tell us how well we are using our assets to generate cash flow from operations. Okay. So we're going to take our operating cash flow, and it's divided by our average total assets. So we have to take the current year plus the prior year, come to a subtotal, divide by 2. Okay. And it asks you for the current year, the prior year. So the prior year, we'll take the prior year operating cash flow and divide that by the average total assets. So we take our total assets at the end of the year plus our total assets from the year prior, right? Because that would have become our beginning total assets. Add those together, come to a subtotal, and then divide by 2. Okay, so you're going to do those calculations for Apple and Google, and then you're going to answer some questions about them. Okay. Next one, it's going to be another cash flow on total assets, and now you're going to be calculating it for Samsung and then comparing them to Apple and Google. So this next one is like our Tableau mini cases, where we're going to be using data visualizations, okay, to analyze the cash flows. And so we can see we have various industries at the top, and then they're showing competitor companies and using data visualizations to show cash flows from operating activities, investing activities, financing activities, and then also their net income. So make sure you're on the correct industry. So this one here asks for industry A. Make sure we're on industry A, and then ask for which one has the most cash inflow from operating activities, all right, our operating activities. And they give you also the number. So you can answer those questions, right? Which one of these reported net cash used in, right? So it can be either net cash used in or provided by. So used in means it's negative, okay? So that's what they're asking here. So net cash used in investing activity. So which of them had negative investing activities, meaning they spent more to buy plant assets and long-term investments than they received from selling those. Requirement 3, they want the net increase or decrease in cash. Again, still in industry A, so we can kind of combine these and find the net increase or decrease in cash. They want the amount, and then they want you to say if it was an increase or decrease. Okay, and this last one is a data visualization. Okay, and so again, they ask you for questions. They want to know why financing activities created such a large cash outflow. Okay, so why did we use so much? Why did the financing activities use so much cash, right? Why did we have such a large negative number? So this is understanding what are the cash flows from financing that are negative. So you're going to choose all the ones that are negative from here. And then they ask, how would they be able to generate positive cash inflows from investing activities next year? So which of these choices tell you ways that you would have a positive? Which of these are investing activities that increase cash? Okay, so here's a hint: selling the old company's old factory, right? That's going to be, you're going to receive cash from that. That's going to be one of your answers. And then the last one, this one really made me think, so I'm sure it'll make you think too. So here they're asking you some questions, and we're in industry I, make sure we're in industry I, here in the right industry. And then it's wondering how net cash provided by operating activities is different than the reported net income. So if we look here, and we're talking about Gadberry, so their net income was $121,500. Their net cash flows from operating activities are $108,000. So we can see, let me grab my calculator. Hold on. So $121,500 minus $108,000 was our net cash flows. So we can see our adjustments to net income were a negative $13,500, right? Because our net cash flow was only $108,000. Our net income was $121,500. So we had adjustments that overall decreased our net income by $13,500. So what you need to do is you need to look at the combinations here and look for things that would end up with a minus $13,500, right? So if we look at this first one, decrease in interest payable of $18,900, well, we know decreases in a current liability are a subtraction, okay? But we're trying to see things that combine to a negative $13,500. So that's going to be a minus. An increase in prepaid expenses, that's also a subtraction, right? So we'd end up with the minus $18,900, but then we're going to be subtracting the minus $5,400. So that would overall give you a $24,300 decrease, and our decrease is only $13,500. So you need to look through all of these and find the combination that would get you to a minus $13,500. Okay, so I'll let you do that. This one asks for what would explain the amount of net cash used in investing activities. So which of these things would result in our net cash used in investing activities on Gadberry's statement of cash flow? So we can see Gadberry's investing activities came out to a negative $10,800. So you'll look for these that show, when we kind of see the effects, that they come to a negative 10,000, what did we say, 10,800? Yep. All right, so you might have a little trouble with that, but reach out to me as soon as you have a question, right? This is the only assignment. We don't have a quiz this week, but you may need to brush up on what you learned back in financial accounting, okay, about the statement of cash flows. So you might need to spend some time on that. Okay. All right. Good luck. And I look forward to, getting your emails. Thanks.